Before you even realize it, BlackRock is already in your wallet, your retirement account, and your government's policy decisions. Imagine a company so powerful that it quietly sits behind governments, corporations, and financial markets, managing more wealth than the GDP of most nations on Earth. But who controls BlackRock, and who really benefits from its global power? With over $12 trillion in assets under management in 2025, BlackRock has built an empire of influence that stretches across Wall Street, Washington, and beyond. But how did this financial titan come to dominate the global markets? I'm Mr. Stag, and this is the story of how Larry Fink and his partners transformed a modest risk management firm into the most influential financial powerhouse on the planet. Buckle in, because what you're about to learn isn't just business, it's empire building at a planetary scale. To understand BlackRock, we must first understand its founder. Lawrence Douglas Fink, better known as Larry Fink, was born in 1952 in Van Nuys, California. His father owned a shoe store while his mother was an English professor. The family wasn't wealthy, but Fink grew up with a sharp intellect and a fascination with numbers. After graduating from UCLA with a political science degree, he pursued an MBA at UCLA Anderson School of Management, where he developed a passion for finance. In the late 1970s, Fink joined First Boston, a prestigious investment bank in New York. There, he quickly climbed the ranks and became one of Wall Street's rising stars. Fink was instrumental in developing the mortgage-backed securities market, which would later become infamous during the 2008 financial crisis. By his early 30s, he was managing billions and had established a reputation as a brilliant strategist. But in 1986, disaster struck. Fink made a miscalculation in the interest rate environment that caused First Boston to lose $100 million. It was a humiliating setback, and Fink was subsequently fired. This failure left a deep impression on him, teaching the crucial importance of meticulous risk management in finance. Determined to never repeat such a mistake, Fink carried this lesson forward, and it would become the foundation for what would later grow into BlackRock. BlackRock began not as a giant, but as a bold idea in a tiny room. The year was 1988. Fink teamed up with 7 other partners, including Robert Capito, Susan Wagner, and Ralph Schlosstein. They launched a company initially called Blackstone Financial Management, backed by Stephen Schwarzman's Blackstone Group. The mission? To build the first institutional-grade risk management platform in asset management specializing in risk management and fixed income investments. A company that treated risk not as an afterthought, but as a product. Unlike traditional asset managers, BlackRock would use technology and data to meticulously analyze risk and avoid the kind of catastrophic losses Fink had endured at First Boston. The firm's early clients were pension funds, insurance companies, and governments, institutions that needed reliable, low-risk returns. Fink and his partners developed an innovative technology platform called Aladdin, Asset, Liability, Debt, and Derivative Investment Network, a risk management system that could track portfolios, stress test them against economic scenarios, and flag potential vulnerabilities. Fink, obsessed with risk analytics, led the development of Aladdin, a software platform that would quietly become one of the most powerful tools in global finance. Aladdin tracks trillions in assets across 200-plus institutions. It helps BlackRock and its clients model risk, manage portfolios, and simulate financial shocks before they happen. It's like the nuclear launch codes of Wall Street. Over time, BlackRock went from just managing money to also managing data. If the markets are a battlefield, Aladdin is the radar, the command center, and the missile defense system. Clients like the Federal Reserve, European Central Bank, and Japanese pension funds rely on BlackRock's tech infrastructure to make decisions that affect global economies. It tracks every bond, stock, and derivative, simulating stress tests like what would happen if oil prices collapsed, if interest rates surged, or if a war broke out. The most astonishing part? Through Aladdin, BlackRock indirectly oversees nearly 10% of the world's financial assets and influences assets managed by others that rely on Aladdin. That gives it unparalleled insight into the movements, risks, and priorities of global capital flows, without even technically owning all of it. This platform gave BlackRock a massive competitive advantage. While competitors relied on intuition and market timing, BlackRock relied on data and precision. By 1992, BlackRock had separated from Blackstone, becoming an independent company with Fink firmly at the helm, and the group had $17 billion under management. Schwartzman kept a stake, but the two firms became distinct. In 1999, BlackRock went public, listing on the New York Stock Exchange at $14 per share. The IPO gave the company access to capital to fuel its growth and acquisition strategy. Over the next decade, BlackRock expanded globally, opening offices in Europe and Asia, and steadily growing its client base among governments, central banks, and corporations. But the real turning point came in 2006, when BlackRock acquired Merrill Lynch Investment Managers for $9 billion. This deal doubled its assets under management overnight and positioned the company as a global leader in asset management. Just 3 years later, in 2009, BlackRock made another historic acquisition, buying Barclays Global Investors for $13.5 billion. That purchase gave BlackRock control of the iShares exchange-traded funds, ETF business, which became the crown jewel of its empire. BlackRock's growth accelerated with the explosion of ETFs, exchange-traded funds. iShares. ETFs allowed investors of all sizes to access diversified portfolios at low fees, fueling the explosion of passive investing. Today, BlackRock controls the world's largest ETF platform, with trillions under management in products like the iShares Core S and P500 ETF. Investors loved the convenience. BlackRock loved the fees, small per investor but massive at scale. The 2008 financial crisis was devastating for Wall Street, but for BlackRock, it was the moment that cemented its dominance. As banks collapsed and governments scrambled to stabilize the economy, the U.S. Treasury and Federal Reserve turned to BlackRock to help manage toxic mortgage assets. BlackRock became the government's go-to problem solver, handling the liquidation of Bear Stearns and AIG's troubled portfolios. The firm's reputation as the adults in the room skyrocketed, and its relationships with regulators and central banks deepened. While many financial firms saw their reputations shredded in the crisis, BlackRock emerged as a trusted partner. Its assets under management surged as investors sought safety and expertise. By 2010, BlackRock had become the world's largest asset manager. Between 2008 and 2020, BlackRock grew from $1.3 trillion in assets to over $7 trillion. In 2021, it briefly crossed $10 trillion, making it the largest asset manager in the world, ahead of Vanguard and State Street, more than the GDP of Japan and Germany combined. But BlackRock didn't just win with ETFs. Fink and team managed billions in crisis-era portfolios for the Fed, earning both fees and trust. If you have a retirement account, chances are BlackRock manages part of it. That trust continued during COVID-19. The Fed once again hired BlackRock to manage bond buying programs, a move that sparked criticism about favoritism and conflicts of interest. By 2023, BlackRock managed over $9 trillion, with influence in nearly every country and asset class. From stocks and bonds to real estate and infrastructure, the firm became the closest thing the modern world has to a financial central nervous system. This enormous size has sparked criticism. Detractors argue that BlackRock wields too much influence over corporate governance, often voting on behalf of shareholders in board elections and policy decisions. Some even describe BlackRock as a shadow government of finance, quietly shaping the global economy behind the scenes. Its influence stretches across 100-plus countries, and its executives have close ties to the US Treasury, central banks, and the World Economic Forum. One flashpoint is ESG, environmental, social, and governance investing. Under Fink, BlackRock publicly supported sustainability, pushing companies to disclose climate risks. In his 2020 annual letter, Fink declared that climate risk is investment risk. But this stance backfired politically. Progressives said BlackRock wasn't doing enough to fight climate change. Conservatives accused it of woke capitalism, especially after it backed ESG policies at oil and gas firms. In 2023, several US states, like Texas and Florida, pulled billions from BlackRock's management, accusing the firm of political activism. Meanwhile, environmental groups said BlackRock still invested heavily in fossil fuels. Beyond politics, critics warn of market concentration. Through its iShares ETFs, BlackRock is often the largest shareholder in thousands of companies, including Apple, Microsoft, JP Morgan, and ExxonMobil. That raises questions about corporate governance and whether true competition still exists. Fink argues BlackRock is a fiduciary, not a policymaker, but the line between passive ownership and active influence is blurring fast. BlackRock isn't a bank, but its financial muscle rivals one. The firm makes money primarily from management fees on its trillions in assets. These may be just 0.2% per year, but with 12+ trillion under management, even a fraction becomes billions. In 2023, BlackRock generated over $17.9 billion in revenue and more than $5 billion in net income. It employs over 20,000 people across 100+ offices globally. Beyond ETFs, it manages hedge funds, real estate, private equity, and infrastructure. Its private markets division is growing fast as institutions seek yield outside traditional bonds and stocks. Perhaps more importantly, BlackRock has become a policy partner to governments. During the Eurozone crisis, it advised the Bank of Greece. In Canada and the UK, it consulted on pension reform. That influence is lucrative and controversial. Fink insists BlackRock offers expertise, not lobbying. But when your algorithms help set interest rate policy and your firm owns stakes in everything, separating business from politics becomes impossible. For anyone who got in early on BlackRock's journey, the results have now proven extraordinary. When the company went public in 1999, the IPO price floated around $14 per share. That same stock now trades in the neighborhood of $1,125 to $1,130, a staggering return of roughly 8,000%, excluding dividends. To put it simply, a $10,000 investment at the IPO would today be worth nearly $830,000. That transformation captures how BlackRock evolved from a modest startup focused on risk management into a colossal, trillion-dollar powerhouse quietly shaping the global economy. Larry Fink is the most powerful man in finance you've never elected, yet Fink remains largely in the shadows. He doesn't tweet, he rarely gives interviews, but behind the scenes, he's orchestrating global finance like a maestro, redefining capitalism, one line of code and one ETF at a time. His personal net worth? Over $1 billion. Looking ahead, BlackRock faces both challenges and opportunities. The rise of artificial intelligence, blockchain, and decentralized finance threatens to disrupt traditional asset management. But BlackRock has shown a remarkable ability to adapt, incorporating new technologies and expanding into new markets. Larry Fink, now in his 70s, remains at the helm, though questions about succession loom large. Will BlackRock continue its dominance under new leadership, or will disruption erode its power? One thing is certain, BlackRock has fundamentally changed how the world invests. Its embrace of passive investing, its pioneering use of technology, and its global reach have reshaped finance in ways that will last for decades. From Larry Fink's early misstep at First Boston to the creation of Aladdin, from the chaos of the 2008 financial crisis to becoming the $10 trillion titan of global finance, BlackRock's story is one of ambition, innovation, and power. Whether you see it as a stabilizing force or a dangerous concentration of wealth and influence, there's no denying BlackRock's role as the most important company in global finance today. Thanks for watching. If you enjoyed this origin story, be sure to like, comment, and subscribe to Stag Research, your go-to channel for business deep dives and founder legacies. Got a hot take on BlackRock's power? Drop it in the comments. Mr. Stag, logging off.